The views expressed on this podcast are those of the participants, not of Reuters News.
Warren Buffett on Saturday said he will step down as CEO of Berkshire Hathaway at the end of the year. During the company's annual shareholder meeting in Omaha, 94-year-old Buffett said it was time for Vice Chairman Greg Abel to take over the reins. It caps a remarkable 60-year run where Buffett transformed Berkshire from a failing textile company into a trillion-dollar conglomerate.
Warren Buffett has passed from the realm of mere wunderkind investing titans to become a totem for aspiring financiers across the world. At once a buy-and-hold operator, a stock picker with a track record like no other, and a scout for generational talent, his 6 decades at the helm of sprawling conglomerate Berkshire Hathaway was so successful across so many domains that it's perhaps simplest to sum it all up in one eye-popping number: 5,502,284%. That's the overall gain in Berkshire shares between 1965 and 2024, a record that, against all conventional wisdom, trounces the wider market. As at age 94, he now finally steps back, Berkshire's next CEO, Greg Abel, inherits leadership of a $1 trillion company facing one big question: what it will do with a now $348 billion cash pile. The history preceding him and the task ahead of him is the focus of this week's Viewsroom. Welcome back to the Viewsroom, the weekly podcast that invites you, the listener, into a lively debate with Breakingviews columnists. I'm your host, Jonathan Guilford.
And I'm Amy Donlan. Jonathan, I think that intro, just about covered the sort of enormity of what we're dealing with here with Warren Buffett stepping aside. I think a lot of people, obviously, he's been around for so long, decades, as you said, expecting this. But in some ways, I wouldn't fancy being Greg Abel trying to replicate the success he had, whether that's even possible at all.
Well, this is the funny thing, right? You're a guy stepping into a seat that has been prepared for you about as well as it ever could be and to be clear, Warren Buffett, we're not just talking about a person at this point. This is a guy who, investors from all across the world go to Omaha of all places to see the kind of annual Investor Day shindig. They sell plush toys of Warren Buffett for people to buy and take home. Like, this is a person who has laid the table about as well for you as it could. And yet the looming shadow of that legacy, it ends up making it feel like Greg, despite the fact that he has, again, $350 billion, looks a little bit on the defensive kind of coming out of the gate here, right?
Absolutely. And thankfully, we have our colleague, Jeffrey Goldfarb, who certainly has been, I think, following Warren Buffett's career for a long time. And also, I would imagine, has many, many views on Greg Abel and what's possible, I suppose. So, Jeff, you're very welcome to the Viewsroom.
Thank you very much for having me.
Maybe it's best to just start with some of the history here. Jeff, I think you've been a Buffett watcher for longer than Amy or I have. Obviously, you kind of look back at the original history. Berkshire Hathaway, as we know it today, sprawls across insurance, energy. It's got 189 operating companies at this point. But when Buffett took the helm in the 1960s, it was a struggling textile concern. What happened in the interim?
Well, I think that's sort of one of the ironies and of the many ironies and dichotomies with Buffett is that Berkshire Hathaway actually was a terrible investment. And he's acknowledged that it was, it was a struggling textile business that ultimately he couldn't save. But of course it led to this massive empire that he built. And ultimately sort of building on pioneering this idea of using insurance premiums to generate cash flow, and then to taking that money and investing it in a million other businesses, both public and private. To me, for when you're talking about Greg Abel following Buffett, to me, there was a moment in a documentary about Buffett about that was made about a decade ago that really encapsulated how hard that job would be, even if you're not trying to be the next Warren Buffett, which I don't think Greg will try to do. But there's a scene where the documentary maker hands Buffett an old Moody's manual, which was sort of the only way you could get information about securities like decades and decades ago. And Buffett, who has a notoriously photographic memory, that was, he studied those manuals, and then they went on to become like annual reports that he would pour over in financial statements. But the documentary maker hands him one of these old manuals, and Buffett just sort of lights up as he's thumbing through this 100-year-old, or 90-year-old manual. And the filmmaker says to him, it looks like it's almost, he says, is it like looking through an old treasured family album? and Buffett looks at him and says, better. So, I mean, that to me, that is that kind of, religious, faith in just studying stocks. Nobody has done that. Nobody can do that. Nobody will do that. And that is kind of like that to me encapsulates, sort of where Greg has to go, what he has to build on. And the second thing I would say is also just the benefit of the doubt that Buffett gets, that Greg will not get immediately. I mean, he will have Warren's imprimatur, which will mean a lot to the faithful of Berkshire. But Greg's going to have to earn that on his own ultimately, because Buffett always gets the benefit of the doubt. Even when he's doing things that you're saying, he's speaking his homilies that he doesn't actually practice. And, none of it matters. There's sort of like this Teflon on him that we can get into a little bit more. But Greg is going to have to really stand up his decisions much more firmly than Warren has had to do for probably 3 or 4 decades at least, having earned the reputation as just the greatest investor of all time.
Right. Yeah. And it's funny because you talk about the sort of religious studying of all of the financial documents and whatnot. It's funny because you look at the other folks who are, let's say, investing legends, folks who are part of the pantheon, maybe not quite on Buffett's level, but, you kind of look at, I don't know, Bill Gross or like Ray Dalio, and it's, even today on the subway in New York, you'll see every intern like with their like Moelis duffel bag or whatever, and a copy of Principles sitting on top of it. It's like there is that mythology about, you just have to like get deep inside the thought or whatever. But for like Buffett, it seems a little bit different. Like you say, he would like have all of these sort of like homilies and all of these like philosophies he would espouse, but it was never about being captured by that. It's the sort of thing about like consistency being the hobgoblin of small minds. Like he would always do stuff that seemed like it was directly contradictory to what he would do in the past. And like you say, I just kind of wonder for Greg, like if he starts doing things, that's something that Warren would never have done, because you will always be able to find some quote over the course of 6 decades that makes it look like he's betraying the Buffett legacy. I'm just trying to think about like whether there are examples of other folks who have faced that down.
Well, I mean, look, Greg is gonna have Warren sitting over his shoulder for the rest of his career, but that's not necessarily a bad thing in the sense that Buffett has had Ben Graham sitting on it. I mean, he always, he learned, directly from Ben Graham, the father of value investing, and routinely recalls, oh, Ben taught me this, I remember this, so Greg is in a very good position to have learned, at the feet of Warren Buffett, much the way Warren learned at the feet of Ben Graham. But you do have to kind of stray. And to your point, Jonathan, about his ability to kind of sometimes say one thing and do another, or whatever, it may be, less pejoratively. We go back to your intro about the cash, $350 billion of cash that Berkshire's sitting on. Warren Buffett, in 2009 said cash is always a bad investment. Because, I mean, as he, in the most simplistic terms that Warren Buffett would express, inflation erodes its value over time, right? So, and yet here he is sitting on the biggest pile of cash that anybody has ever sat on. So, that's, no, that's a, it may be a good thing right now in the sense that, markets have wobbled. His biggest holding, Apple, he dumped a bunch of it, and Apple sort of fell in the midst of all the tariff stuff. And he's also now, if we are heading into a downturn, then Greg and Warren will be sitting there with $350 billion to deploy when people need capital, and that's what they like to do. But it is, this amazing anomaly that he breaks his own rules.
The one that I was thinking of as like an example, you mentioned Apple, was sort of Steve Jobs, that same kind of, how does somebody replicate what the sort of creator has done? And as you said, Jonathan, this sort of cash pile in such a turbulent market to have all this money. I mean, I'm sort of curious, Jeff, do you have any kind of thoughts as to, because the whole idea, right, is that Warren Buffett made big bets and sometimes counterintuitive bets that due to his reputation, he didn't have to defend as well as others might have to. Whether there's anything we could learn from that.
Yeah, I think the Apple example is a really good one insofar as Tim Cook stepped in and had no intention of becoming Steve Jobs. Like, Tim Cook knew he was not the visionary product guy that Steve was. And there's also a corollary in terms of the cash perspective, because Apple generated and still generates monsters amount of cash. And it was Tim Cook who took the decision, after some pressure from some activists and his own considerations, to start doing massive buybacks at Apple. And Apple's cash pile sort of dwindled. And part of that was because of government policy. They were able to bring money that was being held overseas home and get that back to shareholders at a lower tax rate. But, that's a great example of somebody who stepped into massive shoes and forged his own path, which is sort of what Greg will have to do. The flip side of that, of course, a company we're thinking about this week is Disney, where Bob Iger left, another formidable guy at a legendary company, and his handpicked successor, Bob Chapek, did not fare nearly as well, and Iger came back. Now, I don't think we're going to see that with Buffett, because in a couple of years he'll be 96, and it's unlikely he's going to have regretted his decision about Greg Abel. But nevertheless, there are two tracks on these things when you try to step into an iconic company, a legendary, replacement. You're replacing somebody who's legendary. Greg's, as you say, Greg's going to have to defend his decisions and what he does, and make a name for himself.
This is what I wonder about, the role of lieutenants and the role of handing over from the visionary to an operator, right? Because I think at Apple, you had Tim Cook, who was renowned as the genius of the Apple supply chain. He was pointedly not a product guy. And similarly at Berkshire, you had really, I feel like you can't really talk about Warren without talking about Charlie Munger, who sadly passed away back in 2023. And I think was always seen as that really crucial foil to Buffett, and part of that kind of really again, they were the two visionaries. They disagreed sometimes. And Charlie obviously sometimes went off and did his kind of own bets, like with Costco and so on. But he was able to pin down that kind of visionary lieutenant role in a way. I guess at Apple, you could almost say somebody like Jony Ive or someone like that did. And that was never a specific set of shoes that anybody had to fill after that. And similarly over at Berkshire, you have Greg, who kind of came up through the operating business, right? And I kind of wonder whether it's fair to view this along that same axis of moving from the visionaries to the operators in a certain sense, or if that's maybe too simplistic.
Yeah, I think that's probably a good analogy. He obviously came from this utility business or energy business that Buffett bought, and even there was a very sort of small snippet, I think in one of the articles I read, might have been in the Wall Street Journal, where Abel even was talking about that. Of course, he's going to leave the autonomous setup that Buffett has implemented, where he owns these companies, but he kind of trusts the people that run them to run them. But Abel said that he was eager to suggest potential ideas to the, so he's going to like maybe get a little bit more involved with some of the holdings. The other thing is that, where Buffett had Charlie Munger, I mean, we don't know how Greg will, keep the structure of Berkshire from a management perspective, but he's got Ajit Jain on the insurance side, who presumably, maybe they will complement each other in similar ways. There's, of course, like Todd Combs, who's, one of the investors. There's, so there are people around him that if he sort of enlists them in a similar way, there will be this, not only just this operator kind of transition that maybe Greg will bring to it, but, there will be this, maybe there will be complementary pieces to it that, that enable him to do that.
Absolutely. And the other thing, Jeff, I was sort of curious about is, Buffett has long said that, that Berkshire's size means that, it doesn't really work from an activist perspective, that it's sort of, somehow insulated from that. But, the natural way for investors to think about things is often to think about the sum of the parts and how, well it might do if it were to be broken apart. I just sort of kind of wondered what your thoughts are on that.
Well, I mean, it's interesting, the activist thing, because I forget exactly how it's structured, but his shares are now, ultimately, I don't know if it happens when he steps away or while he's still living or it's after he passes away, but his shares will ultimately be distributed into philanthropic organizations. And then, his controlling stake will no longer be concentrated. And there is this idea that, in fact, at some point in the, not exactly tomorrow, but in some part in the future, that the shares will be dispersed enough that actually an activist could come in and say, this doesn't work without Warren, this doesn't work, so that is something that will not immediately hang over Greg's head, certainly not as he takes the reins next year. But in time, it's sort of, you get back to this point where he's not starting from scratch exactly, but he has got to show that Berkshire Hathaway, a conglomerate in a world where conglomerates don't really work anymore based on the number of breakups we've seen, he's going to have to justify, Berkshire's continuing structure. It's worked for 60 years, but will it work for another 60? That's going to be for him to, to lay the groundwork for. And the size is a big issue. I mean, $350 billion, you really need to find, I mean, a deal of $10 billion is just not going to move the needle for Berkshire. And finding a $50 billion company to buy is a big ask. And unlike Warren Buffett, who could just, pick up the phone and be like, I'll offer you $50 billion for your company, take it or leave it kind of thing. Companies were eager to be like, Greg doesn't have that sway, at least not right now. So, and he may not, maybe that's not even his MO. We don't know yet, but, that all of that is tough.
It's interesting on that execution point though, because I'm taking it in sort of two pieces, right? First off, there's, Berkshire, unusually for even conglomerates, is known as, this kind of like gigantic pool of capital that gets to be used for these big concentrated bets that are essentially just like stock picking bets. And I mean, some of those have gone really wrong, like Kraft Heinz and so on. Some of them have gone really, really right, like Apple. But you kind of look at just like on a pure execution basis, like how do you move into a company at size in a way that moves the needle for Berkshire? Because like your arrival is going to distort whatever it is that you're moving into. And you've seen the way that the hedge fund industry has tried to deal with this is, the pod shop model and all these little autonomous units. And like everybody only has like so much of the pie that they're kind of dispersing at once, and they try to stay market neutral and so on. Like the Berkshire operation is not anything really approaching that. And then you also have, on the flip side, you have the insurance kind of asset gatherer model. And there have been folks like KKR that very, very explicitly says, we're doing the Berkshire model, but way more aggressively. It's in the life insurance space, which is just, maybe it's secularly more of a grower than property and casualty is. They feel comfortable levering it up in ways that like Berkshire maybe doesn't, as Jane was saying, at the investor event this past weekend. So you kind of have like all of these really, really sophisticated, like new financial economy players essentially kind of like surrounding Berkshire. And it makes you wonder whether part of Buffett's success was like how much of it comes down to timing, how much of it comes down to the fact that he was so much more sophisticated and so much more of a devourer of information than people were back in the day. But now not only the information environment has changed, but just like the way in which people execute handling money has become so much more sophisticated. You know what I mean?
Well, he also had the luxury of not caring about the timing, right? Like it was sort of, timing insofar as he loved to be there when, as he put it, the tide washed out, right? Like, and then could step in and find great investments at, depressed prices, the hallmark of value investing. But he also did, like, because of the way he generally, not always, but generally thought about time horizons, when he bought something, in theory, at least, it was for the long haul. Whether more pointedly in the private holdings, less so in the public stocks, although he has had certain stocks like Coca-Cola for long periods of time. There's also sort of, there's an industry type of idea that may change for Greg. Buffett was famously averse to tech until he put some stock money into IBM, which, didn't go great. He ultimately sold it, then went into Apple, right? Like, so there are places, but Buffett is not in like private credit, right? Like he's not going to chase trends, but maybe Greg will. Like maybe Greg will spot something earlier and be more aggressive about it. The other thing to keep in mind is that whereas public equities used to account for about half of Berkshire for a long stretch of time, they're now far less than that. I think it's maybe a quarter or even less than that. Whether or not that changes is also a big question mark. Maybe that's where some of the $350 billion goes. But again, at a place like Berkshire, and the returns that people have come to expect, you have to do really well and pick very, very well, to deploy that sum of capital in a public market.
And just to complete the quote, Jeff, it's when the tide goes out, that's when you know who's been swimming naked, right? For our listeners who don't know that quote. And obviously we're now in tariff land. We have a stock market that's all over the place, a very difficult time, I think, to be picking companies that you think will do well, given how erratic the decisions that are being made are. So yeah, hopefully Greg Abel is not going to be swimming naked and he will make some very good deals and show a great performance. But yeah, as I said at the beginning, not an easy path to follow, but a very interesting one. So yeah, thank you very much, Jeff. Great to talk to you.
Yeah, great to be here.
Thanks for tuning in. This podcast was produced by Oliver Tashlich in London. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favourite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. And check out our views on the biggest stories in business and finance every day at breakingviews.com and reuters.com.